February 3rd, 2026. Gold closes at $5,102 per ounce. Another record. Another headline about safe haven demand. Another explanation that explains nothing. The financial media tells you this is about geopolitical tensions, about investors fleeing to safety, about uncertainty in the markets. They're not wrong, but they're not telling you the whole truth. What happened this week isn't just gold hitting new highs. It's the moment the global monetary system crossed a threshold it can never come back from. And the trigger wasn't what you think. Let me show you what really happened. What the financial press either doesn't understand or doesn't want you to know. Because once you see the pattern, once you understand the mechanism, you'll realize this isn't the end of a rally. It's the beginning of something much bigger. 3 days ago, President Trump announced that an armada of U.S. naval vessels was heading toward Iran. Just in case, he said. Standard geopolitical posturing, the markets assumed. Nothing new. But something was different this time. Within hours, gold jumped 4%. Silver surged 8%. Not gradually, instantly. As if the market had been waiting for exactly this signal. Why? What makes this threat different from the dozens of others we've seen over the past year? The answer lies in something most people don't understand. Something that connects every major monetary crisis in the last 500 years. Something that's been building for decades and finally reached critical mass in the waters off the Iranian coast. The Strait of Hormuz, 21 miles wide at its narrowest point, a geographic choke point that seems almost designed to strangle global commerce. And it's about to become the graveyard of the petrodollar system. But this isn't a story about oil. Not really. This is a story about the hidden architecture of American monetary dominance and how that architecture is finally breaking down. Let me take you back to 1971, August 15th. President Nixon closes the gold window. The dollar becomes pure fiat currency, backed by nothing except faith in the United States government. Most people know this story. What they don't know is what happened next. How America solved the problem of backing a global reserve currency with nothing but promises. The solution was brilliant, diabolical, and temporary. In 1974, Henry Kissinger cuts a deal with Saudi Arabia. Oil will be priced in dollars, only dollars. In exchange, America provides military protection. Saudi Arabia recycles its oil revenues into U.S. Treasury bonds. Instant demand for dollars. Not because people wanted dollars, but because they needed them to buy oil, to function in the modern world. This was the petrodollar system. For 50 years, it gave America an extraordinary privilege. The ability to print the global reserve currency, to export inflation, to borrow without limit. But every system has a breaking point, and Iran just found it. November 2025, Iran begins accepting yuan for oil sales. Not exclusively, not dramatically, quietly. A bilateral agreement with China, then Russia, then India. December 2025, the Central Bank of Iran announces record gold reserves, possibly the largest in their history. Not for investment, for backing, for a new system. January 2026, Iranian officials begin discussing a gold-backed digital currency for oil transactions. No more dollars required? This isn't just policy, this is economic warfare, a direct assault on the foundation of American monetary power, and it's working. Look at what's happening beneath the headlines. China reduced U.S. Treasury holdings by $200 billion in 2025. Russia converted most of its foreign reserves to yuan and gold. Saudi Arabia signed currency swap agreements with Brazil, using reals instead of dollars. The demand for dollars isn't disappearing overnight. It's eroding, systematically, deliberately. And gold is becoming the refuge, not just for individual investors, for entire monetary systems. Central banks purchased over 1,000 tons of gold in 2025, another 800 tons in the first quarter of 2026 alone. This isn't diversification, this is preparation. Preparation for what comes after the dollar. But here's what makes this moment different from every other geopolitical crisis. Here's why gold moved so violently when Trump announced his armada. The Strait of Hormuz isn't just an oil choke point anymore, it's a payment system choke point. Think about it. If Iran controls the strait, they control 30% of global oil flows, but more importantly, they control the terms of payment for those flows. Every day that Iran remains in control of those waters, they prove that alternatives to the dollar system work, that oil can be sold without dollars, that global trade can function outside American control. This isn't just about one country refusing to use dollars, this is about the demonstration effect, the proof of concept. Every other oil producer is watching. Every other central bank is taking notes. And gold is pricing in the consequences. Because here's what happens next. Here's why this rally isn't just another spike that will fade when tensions cool. The US can't actually solve this problem with force. Not anymore. Military action against Iran risks closing the Strait of Hormuz completely. That means oil spikes to $200 per barrel. Global recession, economic chaos. But doing nothing means watching the petrodollar system die slowly. Death by 1,000 bilateral agreements. Death by yuan and rubles and gold-backed alternatives. Either choice destroys the monetary system that's allowed America to live beyond its means for 50 years. The market understands this, even if the policymakers don't. Look at the numbers. Gold has gained 259% in the last year. Not 25%, not 50%, 259%. That's not a normal bull market. That's not safe haven demand. That's the market pricing in the end of monetary privilege. Silver tells the same story, up 150% in 2025, another 55% just in January. The gold to silver ratio collapsed to 46:1, the lowest level since 2011. But this time is different. In 2011, silver spiked because of speculation, because of the Hunt brothers, because of leverage and manipulation. This time it's supply and demand. Industrial demand from AI infrastructure, solar panel manufacturing, electric vehicle production, all requiring silver, all facing potential supply disruptions from Iranian sanctions and Chinese export controls. Physical silver is trading at $100 per ounce in Dubai, while paper silver trades at $72 on COMEX. That's not a small premium. That's market breakdown. The traditional price discovery mechanism is failing. Paper contracts are becoming meaningless. Physical metal is becoming currency. This is what monetary transition looks like. Not a dramatic collapse, a slow divorce between paper promises and real assets. And it's accelerating. Goldman Sachs just raised their December 2026 gold target to $5,400, up from $4,900. But even that might be conservative, because Goldman is still thinking in terms of the old system: supply and demand, investment flows, central bank purchases. They're not thinking about what happens when the entire monetary framework changes. When countries stop needing dollars to buy oil, they stop needing to hold dollars in reserve. When they don't hold dollars in reserve, they don't buy U.S. treasuries. When they don't buy treasuries, America can't finance its debt. When America can't finance its debt, the dollar becomes just another currency. Just another piece of paper backed by a government drowning in obligations it can never meet. That's why gold isn't just rallying, it's repricing for a world without dollar dominance. The World Gold Council estimates that global gold ETFs have seen $77 billion in inflows this year, 700 tons of additional holdings. But that's still less than half of what we saw in previous bull cycles, meaning there's room to run, much more room. Because this isn't just about American investors buying gold, this is about the entire global monetary system seeking an alternative to a currency that's becoming unreliable. Unreliable because the debt is unsustainable. $38 trillion and growing by $2 trillion annually. Unreliable because the system is being weaponized. Sanctions, asset freezes, swift disconnections. Unreliable because the alternatives are finally viable. Iran isn't just proving that oil can be sold without dollars. They're proving that entire economies can function outside American monetary control. China's digital yuan processed $250 billion in transactions last year. Not experimental amounts, real trade, real commerce. Russia's SPFS payment system handled over $60 billion in transactions, a functional alternative to SWIFT. The infrastructure for post-dollar trade isn't being built anymore. It already exists. It's being tested, refined, expanded. And every day it operates successfully, it attracts more users. This is why the U.S. Navy's armada heading to Iran triggered such a violent move in gold. Not because of war risk, because of system risk. The market is pricing in the possibility that America will be forced to defend a monetary system that's already dying, through military action that might accelerate its death, through conflict that would prove once and for all that American monetary dominance requires force to maintain. And force is expensive. Force is inflationary. Force destroys the very credibility that reserve currency status requires. Look at what happened to Britain. The pound sterling was the global reserve currency for over 200 years, longer than the dollar has even existed. But 2 world wars destroyed Britain's fiscal position. The costs of maintaining global dominance exceeded the benefits. By 1944, at Bretton Woods, the handover was complete. The dollar replaced the pound, not through war, through mathematics. Britain couldn't afford to be the global hegemon anymore. The costs were too high, the debt too large. America is approaching the same inflection point, 50 years ahead of schedule perhaps, but approaching it nonetheless. The difference is what comes next. When Britain declined, America was ready to take over. Credible, fiscally sound, economically dominant. When America declines, there's no single successor, no country ready to provide global currency stability. Instead, we get what we're seeing now. Fragmentation, multiple currencies, multiple payment systems, multiple stores of value. Gold thrives in this environment, not as a currency itself, but as the neutral asset that everyone trusts when they trust nobody else. This is why gold hit $5,100 this week. Not because of traditional safe haven demand, because the traditional safe haven, the U.S. Treasury bond, is becoming the thing we need safety from. When the global reserve currency is issued by a country running 6% budget deficits during peacetime, Investors need alternatives. When that same country weaponizes its currency through sanctions and asset seizures, central banks need alternatives. When that monetary system faces direct challenges from countries representing 40% of global GDP, everyone needs alternatives. Gold is the alternative. Not the only one, but the oldest, the most tested, the most trusted across cultures and centuries. And it's repricing for its new role in the global monetary system, not as a relic of the past, but as the foundation of the future. The future where no single currency dominates global trade, where countries settle in yuan and rubles and gold-backed tokens, where the Strait of Hormuz becomes the symbol of that transition, where 21 miles of water changes the monetary history of the world. That future isn't coming, it's already here. The only question is whether you're positioned for it.